3 months ago, I released a video on a prediction of a economic recession, and I think there has been a financial panic in the past uh, week or so, and that does qualify. Though it has been one of the steepest financial declines in a very long time. People are attributing it to the coronavirus, but I don't really think that is true, as the market only crashed a little while after the news of the coronavirus came out. And I mean, Wall Street does usually take a couple days, but it doesn't usually take it doesn't usually take a couple weeks. And another thing, well, at least for something that's as short term as this. And another thing is that it was only after the financial panic started that people started recognizing the coronavirus as an actual threat or something to be taken seriously. When the supermarket started being cleared out of toilet paper, for example, and also all other non-perishable food items except for, a few things here and there. And so that's why I don't think the coronavirus is the cause of the panic. I think it's mostly just due to things being priced a little bit too high, and then people overreacting on other people overreacting, and the chain reaction all the way down. The coronavirus might have contributed to, 1 or 2% of the decline in the S&P 500, maybe even 3 if I'm being generous. But I don't think it was a 20+% decline. So, how did I benefit from the market crash? Well, I did, but I was able to stop some potential losses that I might have had by putting some of my portfolio into cash. I went 50% to cash, but thinking about it, I probably should have put about 2/3 of it to cash, because my prediction was that a financial panic would happen in less than 2 years. So the potential gains at market average that I could have had would have been, about 16% over that time, considering a 7.5% per year average increase. But the losses there were more than about 16% that could be had, and a penny saved is a penny earned. So I would have saved more money than I could have made in either extreme by having my entire portfolio in cash. And considering that I thought it would have been about 30 to 50% decline, if I remember correctly, probably more about 30. Um, I definitely would have saved a lot more if I had it all in cash. Though, considering that I wasn't sure about the prediction, and that you can't put all of your faith into one prediction, I probably would have put about 2/3 of it into cash and 1/3 of it into stocks. But I put about a half in. And also, once the market crashed by, I think it was, the S&P went down maybe 7%, and then the stocks that I was holding went down about 10 or 15% because I was in higher volatility stocks. That's when I put the money into those stocks. And I think I should have waited a little bit longer, because I wasn't entirely sure whether that was just a financial hiccup or a full-blown financial panic, and I thought it was a hiccup at the time, though I should have thought about it a little more, all things considered. Don't think it's the end of the world, though, by any means. from here on out, I think that the market will recover, starting on, about somewhere between the 16th, which is the day that I'm recording this, and the 20th. The market will start to recover, just because I can't imagine the market having a crash of more than about 30%. So I think it will start to recover at around that point. And it's already starting to pick back up a little bit, though in the past it has picked up a little bit before it went straight back to crashing again. So I'm not entirely sure on that, but my estimation is that within the next 4 days it'll start to pick back up. As far as the rate at which it will pick up, I am a lot more sure about that. In the past, the rate of recovery has been always about, a little bit less than half of the rate of decline, but in the opposite direction. So the rate of recovery usually will take a little bit more than twice the time that it took for the panic to happen in the first place, though it won't fully recover. And so I think it will, take a few weeks to get back to where it was before. Well, not all the way up to where it was before, to maybe 2/3 of where, well, two-thirds of the amount that it crashed. So it went down 20-30%. So I think it'll go back up, 15-20%, and that'll take a few weeks. And so, that shouldn't be all that bad. The way to profit off of that is actually pretty simple. You just go into the things that were devalued most, and that's oil. In the past, it's been tech stocks, but during this panic, it hasn't been as much tech stocks as it has been in the past. Usually, tech stocks go down a little bit more during recessions and go up a little bit more during times of prosperity, averaging around 14% per year growth. But that hasn't been true this time around. It's been, pretty consistent, at least for major tech companies. Yandex, however, has gone down a lot, and I would suggest buying some Yandex. It's got about a 20% per year rate of growth over the past decade or so, and it's not quite as consistent as Google in terms of its appreciation and value, but I personally like it better because of, generally speaking, the way it does things. So I'm going to buy some of that. Tailored Brands has gone down to about $2 per share, though I